Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to be with you today, and if you want to open a legal trading account, please contact us through the email Vietnamstockmarket.entry@gmail.com, Telegram Vietnamstockmarket.entry with the phone number is 8491-432-6556, or you can also scan the two QR code on the screen so that we can support you. And the other way to contact with us is please follow and subscribe to the channel name Areca Capital Channel. The owner of this YouTube channel is Areca Nguyen. She's a personal financial advisor. You can contact her with the email hongdongwin@vcsc.com.vn with the phone number is 8491-432-6556. And we always welcome you to our office on the 11th floor, 109 Trường Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And today we're going to share with you about the Vietnam Strategy 2023. Let's come to the oil and gas sector. Gas and LNG fire power plant capacity to expand 4 times over the next 10 years, spurring growth. We forecast Brent oil prices to remain high in 2023 at $90 per barrel, 6% lower than consensus, and $75 per barrel in 2024 to 2026 forwards, 12% lower than consensus. In 2022, the average Brent oil prices rose 39.2% year-over-year to $99 per barrel due to one, the Russia and Ukraine conflict tightening the global oil supply, two, OPEX plus switching from a production increase to a production cut, and three, a recovery of oil demand. The International Energy Agency, Energy Information Association, and OPEC, expect global oil demand to rise by 1.7 million barrels per day in 2023 to 102 million ppd, which would surpass the pre-COVID level. Key risks to our oil price forecast include one, a global economic recession that could weigh on oil demand, and two, a less aggressive view from OPEC that would lead to a lower future production cut than the current level. Gas prices to be higher in 2023. The IEA expects high gas prices will last into 2023, with average gas per LNG price in Japan, US, and EU at $36 per MMBTU, 23% year-over-year due to Russia's uncertain gas supply. In addition, Chicago Mercantile Exchange futures as of October 2022 imply average LNG prices of $31 per MMBTU in 2023. We expect oil prices of $27 to 90 per barrel in 2023 to 2026 forwards, and the recently approved oil and gas law to support the development of new domestic gas projects. Total estimated capex of at least $11 billion, such as Block B and Blue Whale, which would benefit gas, PVS, and PVD. Strong growth of gas demand per the September 2022 draft of Vietnam's National Energy Development Plan. The country's gas and LNG fired power plant capacity will be expanded 4 times over the next 10 years. As such, Vietnam will be thirsty for gas starting in 2023. We estimate a gas deficit of 1.2 billion cubic matters in 2023 that will increase to 7 BCM by 2026, making LNG import projects critical. We expect the monopoly gas supplier in Vietnam, Gas, our top pick, will benefit from its first LNG project, TVI, beginning in 2023 with the 7% net profits contribution. Gas aims to triple the TVI LNG terminal's capacity to 3 to 6 million tons and develop the Sunmi LNG terminal in 2024. PVS is also a beneficiary of the capacity expansion of LNG fired plants in Vietnam. We estimate total capital expenditure of at least $24 billion for LNG infrastructures installation. Growth in petroleum consumption to benefit BSR, PVT, and PLX. The September 2022 draft of the National Energy Development Plan states that Vietnam's petroleum consumption will rise 4.1% in 2022 to 2026 forward, which nearly quadruples the IAEA's expected global growth rates. We believe BSR, our second topic, has fallen below its intrinsic value. We forecast BSR's raw refining margin at $8.6 per barrel in 2023, compares to its record high GRM of $12.5 per barrel in 2022. In 2023, we expect BSR's net profits after tax will drop 50% year-over-year to 7.4 trillion Vietnam dong, but this is close to the previous cyclical peak in 2017. BSR's valuation is attractive at a 2023 forward PE of 0.8 times. Moreover, BSR's share price plunged nearly 50% in H2 2022, underperforming Brent oil prices and regional peers. Their share price move ranged from less than 28% to more than 8% due to a sharp correction in the Vietnamese equity market. Bright outlook for crude and oil products tanker rates in 2023. According to Clarksons and Oil Transporter (PVT), the crude tanker rate outlook remains positive at rates doubled in 2022. PVT should benefit from a recovery of transportation demand and higher freight rates. And let's see on the screen, and I will show you guys some information. Bright outlook for crude and oil product tanker rates in 2023. According to Clarkson and Oil Transporter (PVT), the crude tanker rate outlook remains positive as rates double in 2022. PVT should benefit from a recovery of transportation demand and higher freight rates. We like PLX recovery outlook due to its projected 2023 forwards EPS growth of 10 times year-over-year that is driven by further volume growth and adequate on-time adjustments of base price components. DPM and DCM, our third topic, are dividend yield plays. We forecast robust 2022 forward earnings growth for DPM more than 56% year-over-year, and DCM more than 105% year-over-year, which should translate to robust cash dividends of 6% to 12%. In addition, we expect high international gas prices will support Middle East euro prices at $539 per ton in 2023, less than 25% year-over-year. Therefore, DPM and DCM's 2023 forwards net profits after tax MI will decline 40% year-over-year. However, this forecast implies that DPM and DCM's net profits after tax MI could remain as high as their previous peaks in 2011 to 2012 and support sustainable cash dividends. Oil and gas and petroleum key data as of December 30, 2022. Summary valuations are based on report earnings. Oil and gas stock performance in 2022. VCSC's oil and gas index outperformed the VN index in 2022 and was driven by gas. Gas is the only stock under our coverage that generated a positive return for full year 2022 as gas demand recovered after COVID-19, while international gas and Brent oil prices remained elevated throughout 2022. DCM and DPM, these fertilizer producers, underperformed the VN index and the other oil and gas stocks under our coverage in Q1 2022, as Middle East urea prices dropped in Q1 2022 compared to Q4 2021. However, both stocks outperformed the VN index for the remainder of 2022. PVD and PVS, this service providers outperformed the VN index for most of 2022 as their share prices are highly correlated with Brent oil price movements, even though this company's earnings have not yet felt the impact of high oil prices. VCSC's oil and gas index compares to VN index. Oil and gas stocks compares to VN index. VCSC petroleum index underperformed the VN index in 2022, driven by PLX and BSR. PVT had the best share price performance among petroleum stocks. Although its share price declined by 9%, it still outperformed the VN index for most of the year, which we attribute to a recovery of transportation demand and contributions from new tankers acquired in 2022. PLX and BSR. PLX outperformed the VN index in Q1 2022, nearly mirrored the VN index in Q2 and underperformed in A2 mainly due to a supply shortage that forced the company to sell a higher amount of volume while premiums and transportation regulated costs were not enough to cover actual premiums and distribution costs. Moreover, PLX had to source petroleum imports at high prices to ensure the domestic supply. BSR outperformed the VN index in H1 2022 due to the Russia-Ukraine conflict, which boosted crack spreads to an end and led to the company's robust H1 2022 profits. In H2 2022, BSR underperformed its regional peers and Brent oil prices, partly due to the sharp correction of the Vietnamese equity market. VCSC Petroleum Index compares to VN Index. Petroleum stocks compares to VN Index. What happened in 2022? Brent oil prices. Brent oil prices remain elevated throughout 2022. Brent oil prices increased through the end of H1 2022 before declining in H2 2022. At the beginning of 2022, the price of Brent oil was $79 per barrel. It's then rallied to $124 per barrel in March 2022 as the Russia-Ukraine conflict prompted rate of oil supply uncertainties. Brent oil prices kept increasing in early June 2022 as OPEC decided to raise oil production targets by 648,000 BPD in July to August 2022 from 400,000 BPD in the previous period, which still trailed market expectations. However, oil prices corrected starting in mid-June 2022 as concerns regarding a global economic slowdown, stagflation, and a stronger US dollar could worsen the oil demand outlook. In October to November 2022, Brent oil prices edged up as OPEC agreed to cut its production targets by 2 million BPD from November 2022 under the end of 2023. Brent oil prices then fell down due to China's continued strict COVID-19 measures. On December the 4th, 2022, OPEC decided to stick with its cut of 2 million BPD until end 2023. One day later, the price capped of $60 per barrel that the EU imposed on Russian seaborne crude oil came into effect. This price level is believed to be the fiscal break-even oil price for Russia as is high enough for Russia to continue exporting oil. Therefore, it will not have immediate impacts on the global oil market as China alleviated its COVID-19 measures. Brent oil prices recovered in late 2022 and ended the year with an average price of $99 per barrel. Brent oil price movement in 2022. Brent oil price compares to VN index in 2000 to 2022. OPEC switched from a production increase to a production cut to support oil prices. OPEC is currently the world's biggest oil supplying cattle and accounts for 40% of global oil production. OPEC includes OPEC 30% of global oil supply, Russia 10% of global oil supply, and other non-OPEC members. After historic production cut in 10 million ppd, 10% of global oil demand that began in May 2020, OPEC gradually eased this cut. In July 2021, OPEC agrees to ease its production cut by 400,000 BPD from August to December 2021, which implies a total 2 million BPD production increase. In these monthly meetings in Q4 2021 and Q1 2022, OPEC decided to stick with this plan for a production cut of 400,000 BPD per month until April 2022, with an option to extend to December 2022. On March the 31st, 2022, OPEC can planned for production. OPEC Plus planned for a production increase of 432,000 ppd in May 2022, slightly higher compared to the 400,000 bpd in previous months. Finally, OPEC Plus decided in its June 2022 meeting to lift the production increase to 648,000 bpd in July to August 2022, which allowed the group to fully unwind its output cuts by the end of August 2022. Nevertheless, the actual production of OPEC Plus in May to June 2022 missed the group's targets due to limited spare capacity of several countries within the group, which prompted concerns of a limited oil supply. In October to November 2022, OPEC Plus agreed to cut its production targets by 2 million bpd from November 2022 until the end of 2023. OPEC Plus maintained its production cut targets on December the 4th, 2022. Latest OPEC Plus production cut plan. Latest OPEC Plus production cut plan million bpd. U.S. oil production gradually recovered to near pre-COVID level. According to Bloomberg data, U.S. rig counts and oil production gradually recovered from their historic respective lows in 2020 and 2021. Rig counts have dropped over the past few years, which we believe is due to years of low capital spending in upstream oil and gas activity. After hitting its bottom in mid-2020, U.S. fleets bounced back to 780 rigs on average in December 2022. Meanwhile, U.S. oil production recovered to slightly below its pre-COVID level. U.S. rig count and production. China's oil imports remain resilient despite lockdowns. As shown in Figure 385, China's crude oil imports declined in February 2022 amid a new round of lockdowns in Shanghai, but they rebounded in March to May 2022 as China increased Russian oil imports and discount prices compared to Brent oil prices. However, China's imports dropped in June 2022 due to less spot purchasing by state-run refineries, as they anticipated strict COVID-19 lockdowns would curb demand. In September to October 2022, China's crude oil imports recovered as refiners, one, took advantage of lower oil prices and prior months, two, refilled the inventory for 2 new refinery units, and 3, stocked up for a boost in exports of refined fuels. China's monthly crude oil imports and quarterly GDP growth rate. Natural gas and LNG prices. LNG prices skyrocketed in 2022. The average Japan LNG import price spot contracts increased 89% year-over-year to $33.8 per MMBTU in 2022 due to concerns of a supply disruption resulting from the Russia-Ukraine conflict. Japan LNG import prices term contracts experienced a similar trend but were lagged compared to the spot prices and relatively more stable. Volatile spot prices caused LNG importers to hurriedly lock in prices for long-term contracts, thereby pushing LNG prices of term contracts to 16.9 US dollar per MMBTU, more than 80.5% year-over-year in 10 months 2022, due to a persisting tight LNG supply caused by underinvestment and higher demand from Europe. Japan LNG import prices term contracts are poised to remain elevated at 18 US dollar per MMBTU in 2022 forward. Japan LNG import prices in 2022. LNG prices in 2000 to 2022. Global LNG prices and natural gas prices climb along with Brent oil price. In 2022, the Russia-Ukraine conflict and a tight supply boosted LNG prices in all major markets, including Europe, Asia, and the US. The sharp drop in the piped gas supply from Russia to Europe caused European countries to aggressively import LNG, driven by European LNG prices to a record high in Q3 2022, and indirectly causing the same effect on Asian spot LNG prices. Meanwhile, Henry Hub natural gas prices reached their highest levels in 2007 due to the tight gas markets in the US and low shortage levels. Average spot LNG prices in 2022 in the US, Japan, and the EU were up 1.7 times year-over-year, 1.9 times year-over-year, and 2.9 times year-over-year, respectively. However, spot LNG prices cooled starting in September 2022. Specifically, the spot Henry Hub natural gas price in the US in October 2022 fell to the Q1 2022 average, while spot LNG prices in Japan and the EU in October 2022 dropped 30% compared to the Q3 2022 average. Global spot and term LNG prices compared to Brent oil prices. 2023 outlook for oil and gas prices. Brent oil price outlook. We maintain our Brent oil price forecast at $90 per barrel in 2023 forwards and $75 per barrel in 2024 to 2026 forwards. We maintain our average Brent oil price assumption at $90 per barrel in 2023. We believe, one, a recovery of crude oil demand driven by the reopening of China, and two, OPEC Plus maintaining its plan of easing 2 million BPD of production per month until the end of 2023 should keep oil prices high in 2023. We maintain our 2024 to 2026 forward average oil price assumption of $75 per barrel, as we believe the rise of renewable energy and increasing global spending for the upstream sector will help to normalize oil prices. Furthermore, we expect $75 per barrel to be a strong support level due to underinvestment in the oil industry globally over the last 7 years, coupled with higher production costs that are partly due to rising financing costs as the EU, US, and Japan have restricted funding for new oil and gas projects. We also believe that lasting deglobalization as a result of countries seeking greater self-sufficiency in key strategic resources will support oil prices over the longer term. And that brings me to the end of my presentation today about oil and gas sector. If you want to open a legal trading account, don't hesitate to contact with us with the information on the screen so that we can assist you. Thank you for your listening and have a nice day. See you next time.